today. I'm Margaret Ann from Tech Hub, and today we have James from KM Capital joining us to talk a little bit about their approach to venture capital funding. So first off, can you talk to us a little bit about the types of startups that you invest in and at what stage they're typically at?
Yes, definitely. Thanks for having me as well. Really pleased to be kind of involved. So thanks, Margaret Ann. So the fund that I am with is called KM Capital. So KM Capital owes its existence basically to the success of Boohoo.com, the fast fashion retailer, which has grown considerably over the years. In 2014, it listed on AIM, and KM Capital was kind of a product of that. So a couple of years later, a member of the founding family of Boohoo set this fund up to try to identify exciting kind of consumer-focused, tech-enabled startups, and we look to invest in them at the earliest stages, really. So we would call ourselves a seed investor. I guess that's quite a broad term. What that means is we're investing from anywhere from 50 grand up to 300 into what we deem to be kind of scalable, tech-enabled businesses ordinarily and brands, and yeah, just anything that kind of fits with the background of our three founders, which is all around e-commerce, retail, and just high growth. Yeah, so that's us.
Okay, and so as you invest in like tech startups with consumer-facing goods, what sort of KPIs and metrics do you use to judge their like potential success?
So KPIs wise, I think that's quite difficult, and it's probably I wouldn't say that we have any kind of set numbers that we look at or set triggers. I think we're kind of agnostic of what kind of vertical that a startup might be in, and I think each sector or each business will have a different set of KPIs that it needs to satisfy. In terms of metrics, I think we're less interested in kind of really digging into those. I think the next level of investor from us, the next one up the chain, might be more interested in that. But for us, it's more around kind of the founder, the market opportunity, the team, the extent to which a founder might kind of fit with our sort of our own culture, if you like. One thing we will do, like we'll always review a business's forecast. We'll look for the 3 or 4 key numbers within that forecast that kind of make that business rocket, and then just have a look at those numbers and think, do these seem like a reasonable starting point? Is any improvement in these numbers in a customer cost of acquisition or a lifetime value? Does this starting number appear to be reasonable based on everything else that we see, and just what we know generally? And do we think that that's kind of a sensible starting point? So metrics wise, there's no boxes that need to be ticked. It's more just at the stage that we invest at, we have a look and we think, okay, first of all, what do we kind of think of this founding team? Would we back this founder kind of regardless what they were doing? And then second of all, do we think that the forecast that we've been presented with is like a reasonable starting point for this?
Okay. And actually on that note of forecasting, how far out do you want to see the forecasts? How many months do you typically look for?
I think a minimum of 3 years, like a minimum of 36 months. And I always, again, like super early stage that we're investing in, I know that probably even by month 1 or month 2 of the forecast that these numbers are going to be out of date. There's going to be lots of testing. There's lots of unknowns. But I think we'd like to see from 3 years to 5 years. Obviously, the further ahead you forecast, the more unpredictable things get. But we like to see. I don't mind seeing kind of. It's encouraging to see sort of hockey stick growth. I think as a founder, I think you've got to appear ambitious enough, but not unrealistic in your expectations of having, I don't know, £100 million of revenue in year 3. So I think I'd like to see 3 to 5 year forecast, sensible, okay. Like not completely outrageous, but ambitious enough to excite you as an investor.
Okay. I'm talking a little bit about the founder, especially like in the early stage when founder fit is so important. How do you gauge whether or not you'd be a good fit to work with the founder?
How do we figure whether we would kind of complement them quite well?
Yeah.
I think as a fund of four people, I think we're quite open, honest, humble. I think the people who launched our fund, they have achieved a lot in business, but they're very down to earth. They're humble, and I think we like people like that. We like people who are who don't kind of come at raising money as kind of a founder versus investor. It's more like we like kind of a collaborative feeling. We like people who we feel that we can partner with, who will be open to listen to us. I think a skill that you probably have to have as a founder is canvass lots of opinion, listen to your investors, understand that only you know your business under the bonnet, and your investors will mean well and give you lots of bits of advice, and it's up to you to kind of sift through that and think what are the key things here. So I just think we can kind of get a feeling through how conversations are going, and we'll probably meet, there's several hours worth of meetings that we go through with founders before we make an investment decision, and I think you kind of get a feel for the culture, and you can talk to other investors who are already involved in the business. How does this founder kind of report to you? What level of engagement do you have with them? So yeah, there's ways that we kind of get comfortable with founders.
Okay. For founders who don't have any investors, like you'd be the first money in, how do you gauge, like through your conversations, their kind of willingness to hear feedback and their understanding of the business?
I think again, like that's like really difficult. I think for us to be first money into a business, I think you would have that track record behind you anyway. Like often businesses that we're investing in, they've maybe already they'll have done their kind of SEIS 150k round. We like to see that round having been filled by what we'd think of as kind of domain experts in that field. I think ultimately, like, it's a bit of a stab in the dark. I mean, we don't know people, and conversely as well, you don't really know your investors that well until years down the line. So I guess it's a risk, that we misjudge people, or they expectations are kind of misaligned as to what you're going to get out of the relationship. It's quite difficult, but of the companies that we've invested in so far, I think I would like to think that everyone would speak highly of us. We all got on quite well. I don't think we've made any big errors kind of on that front so far.
Yeah. So as you've mentioned, your team has like a really vast experience in the consumer goods space. So what are the sort of like pitfalls that you've seen startups who are trying to enter this market?
I think, well, closest to home for us is probably fashion. Boohoo.com. The head of our fund co-founded prettylittlething.com, which is up to £500 million of revenue a year now. We see in fashion people maybe not giving supply chain as much focus as it deserves. I think that is the ultimate key thing in a business. If you look at someone like Boohoo.com, they've just got their logistics and their supply chain just working so fast and so efficiently. That's how they're winning in that market. I think the cost that it takes to build a consumer focused startup and the amount of cash that you can get through trying to acquire customers, even before you know what your most efficient channels are probably more punishing than people will expect. So I think getting through marketing budget really quickly and not quite knowing even by the end of that what your most efficient channels are, I think that's quite a common pitfall.
Interesting. Okay. And one last question. So what does your VC firm offer that others don't? Like why should startups go with you?
I think it's that kind of e-commerce, retail, marketplace, consumer dynamic kind of experience that we have. I think for the right type of business, we're quite useful in that, we still have, really good connections into not only the fashion brands that we kind of sprouted up off the back of, but just fashion more generally. So if you're a business which sells a product into a retailer, I think not only do we have great knowledge of how that kind of business thinks and its decision-making processes, but I think we can connect a startup into a business like that. So we can speed up connections into the target customer, which is also great for us because that head of e-commerce or that head of buying or whatever has a conversation with that startup pre our investment. We get kind of inside feedback almost. I would like to think that's quite a nice dynamic for everyone. So fashion groups that we're connected to have a look at a lot of innovation. We get direct feedback as the end user of this product. The startup cuts out that 12-month sales cycle, it significantly reduces that, and then we just get a little bit more confidence to make an investment. So I think for anything selling into retail, I think it's great. And then the businesses that our own founders have started, I just think some of the learnings that they have had over the years just can really be a benefit. I think a lot of consumer focused businesses, especially kind of marketplace type companies, I think there's some shared learnings and shared common problems that kind of business will have. And a couple of our founders have navigated through those a couple of times.
Okay, great. Well, thank you so much for joining us.
Oh, not at all. Thank you. It's been a pleasure.